Hello everybody and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around the market and look for something to trade. Well, if you've been watching the market at all over the last few weeks, you've seen a lot of volatility. As you can see here, this is volatility down here. So the market's dropped like 10 plus percent. Let's see over here. I can tell you right now with this little. So it's dropped almost 11% in the last month. So it's been bouncing around quite a bit. All these red candles are obviously big down days. You can see in the last week it really bounced around a lot. It had a big down day and then it kind of went up and down, up and down, up and down for the rest of the week. But the important thing to note is volatility is still high. So what we're going to do is anytime the market gets extremely volatile, personally I stay away from individual stocks because stocks can have big moves, right? You don't know what's going to happen with stocks. Amazon's had a big move. Let's see, Tesla over the last month has been all over the place. I'm just looking at the big kind of Nasdaq stocks because they're a lot more volatile generally than the market. So what I'm going to do is instead of going into an individual stock where things might move a lot, because you don't know with earnings coming around and whatever kind of information comes out, big moves can happen on a daily basis where what they call ETFs, these things like SPY, this is the S&P 500. So this is 500 stocks kind of wrapped into one. So you can imagine the volatility kind of gets diluted a lot more when you got 500 stocks that are kind of moving up and down as opposed to potentially just picking one. Yes, you can pick one that might not move at all, but you could pick one that might move, $100 in a day. You just never really know. So again, when the market gets extremely volatile, like it has been over the last month, I stay away from individual stocks and I tend to trade the market. So what we're going to do is we're just going to go bounce around like we did a couple weeks ago and see which index is the most volatile. So right now, if we look at SPY and we look down here on the right, you'll see volatility is at 24%. So that's the SPY, that's the S&P 500. So now we'll go over to the Russell, which is the Russell 2000, which is the small cap stocks. And again, if we go over here, you see it's 68, obviously way higher. And you can see that right here. The volatility is much higher than it was on SPY. And finally, as I've left it for last on purpose, we'll look at the Nasdaq because that is way up here at 74%. So that's the most volatile index we have. So what I'm going to do is just trade the Nasdaq. So let's go over to the trade page and take a look now. So here we are at a trade page for QQQ. And again, we're going to go down here to the 47-day expiration cycle, which will be 46 tomorrow, which is perfect. You can see the stock price is essentially 352. And I've already lined this up to save us the trouble of looking around. So 352. In order to set this trade up, we're going to go roughly $30 down on the put side. And you can see on the call side, we're going up a little bit more, $34, which means we're skewing this slightly to the upside, meaning the put side is closer than the call side. Totally a personal preference. I'm doing that because I feel the market is sold off so much that even if it goes down from here, it won't go down as far as potentially it might go up again in the next 46 days. So I'm leaving a little bit of room to the upside. I still got plenty of room to the downside. It can still go down $30 before it hits my put side, but it can go up from here $34 before it hits my call side. So I'm just leaving a little bit of room there. And as you know, we always buy the put and call $2 away to create a $2 wide iron condor, and we're looking to collect 66 cents or more on this trade. So what's going to happen tomorrow is when the stock market opens up, let's just assume it opens up at the exact same price. We'll start by going roughly $30 down on the put side, $34 up on the call side, creating this $2 wide iron condor, and we'll look to see what kind of credit we get. If we don't get enough, we're going to start moving sides in. We can move the put side closer. If we want to leave more room to the upside, we can bring the call side down lower. If you think that you want more room to the, more room to the downside, etc. But the bottom line is we're going to go roughly $30 away on each side and start playing with the numbers till we get a credit we're happy with. And that credit has to be 66 cents or more. And that is our trade in QQQ for tomorrow and why we're making this trade as opposed to jumping into an individual stock. Hello everybody and welcome to what I believe is an exciting opportunity. Now many of you might be familiar with my classes up on Udemy, these 5 courses that I have on Udemy right now under the Option Trading for Rookies series. And my goal, if you follow along with what I'm teaching, is to really get you all up and trading as confidently and as quickly as possible, which is why I really believe this service I've created is the best way to get to the next level. Now, if you go to sharpertrades.com and you go to the courses page, you'll see these alerts pop up. And the option basic trade alert right here sends out 2 to 3 trades per week in real time. These are trades I'm actually making at the time I'm making them. And on top of that, they'll send you the alerts when I close these trades for the maximum profit potential, best return on that trade. Now, normally it's $49 a month, but I want to reward all of you who want to take advantage of this because you're taking my course. I feel like it's in your best interest and mine to get you kind of up and going as cheaply and quickly and confidently as possible. So go to Sharper Trades, go to courses, look up this alert, and then what happens is if you type in this code right here, basic option FB1, so when you click on this alert, it'll take you to a page where you can type in this coupon code. And for you lucky few that want to take advantage of it, I'm going to give it away for $1 for the first month, because that's how important I think it is to get up and trading as quickly as possible, or at least see somebody trading to see how it works. Now, as I said, it's only $1 for the first month. If you stick with it, it'll go to $49 a month, but you can cancel anytime. So if you want to do it for a month just to see what it's all about, great. If you want to keep going, great. But again, this is to thank you for being such loyal and studious students, because like I said, at least for me, the best way to learn how to trade is to get up and trading with somebody that's trading in real time, which I am. So take advantage of this. Go to the Sharper Trades page, type in this coupon code, and go ahead and get this for only $1 for the first month and see what trading looks like in reality. And you'll get up and trading, I believe, quickly and confidently, much quicker than just trying to learn it through book smarts. So take care, and please continue on with this course. Thanks.